Regional bank earnings kicking off this week. Well, all bank earnings kicking off this week tomorrow. In fact, let's bring in Brian Ferrand, Head of Regional Banks Research at Autonomous. Brian, great to see you. Thanks for joining us. Big picture questions first for banks earnings season as a whole, if that's all right. And I guess the main focus, as yields have risen, is going to be on net interest income. What's your outlook there?
I think that's 100% right. Net interest income is the biggest focus. It's 60% of banks' revenues. And it's been a slog up until now. We've had to absorb a full year of negative loan demand and a full year of really low interest rates. As you pointed out, things are looking a little bit better on the interest rate front. They're also looking better, importantly, on the loan demand front. It looks like 3Q will be the first positive quarter of loan growth since the pandemic hit. And it looks like September is probably the strongest of the 3 months. So we're starting to see some green shoots. We're starting to see a little bit of a pickup in commercial borrowing, in credit card borrowing, even in areas like commercial real estate are starting to make a comeback. And that probably makes the forward commentary a little bit more optimistic. So the 3Q numbers themselves, still really tough trends. But as we look in 4Q and importantly into 2022, it does seem like we're starting to turn that corner and bounce off the bottom.
I guess the other story of banks for the last 3 or 4 quarters has been each time wondering if the boom in capital markets revenues could continue, and it seemingly has for more quarters than we would have expected. Is the time up, though, for capital market revenues being quite so strong?
I mean, some of the numbers have just been gaudy, right? I mean, wealth management revenues are up 18% year over year. M&A is up 30% year over year. Equity capital markets up 77%. So you're spot on. That has been stronger for longer. 3Q is still great. 4Q outlook, I still think it's going to be great. I think as you look into 2022, I mean, look, we've all been in this business long enough. We know it's cyclical. We know you don't get a lot of lead time that the cycle is going to change. And frankly, the bank's crystal ball is only so much better than ours. So I think the things people are looking for is, what kind of budget are you setting? How are you thinking about compensation? The banks don't really have a ton of visibility into these businesses, even into the first half of next year. But just how are they starting to set their outlook and manage their business?